thank you, Amol, very much for inviting me to FinNext. And I'm very excited and very happy to be part of this event. So thanks again. You asked me to give you the regulatory perspective, and very helpfully, you've given me a scaffolding to hang my talk on. So now, of course, we all know that the development and use of new technologies that will improve the financial services is what FinTech is all about. So the first thing I'd like to say is that FinTechs are here to stay, and they're here for the long haul. And India, as you know, Amol, is one of the fastest growing FinTech markets in the world. So it's attracting investors like bees to honey, because it's estimated to grow to at least 150 billion by the next year. And therefore, everything is going for FinTechs, including the regulator. Now, let me come to your first question, which was very interesting. You said, how do regulators view FinTechs? Well, I'd like to say that they view FinTechs a bit like FinTechs view regulators. A little bit of caution, a little bit of wariness, some fear, and curiosity of exactly what they're going to be doing next. Now, let's see what regulators really worry about. Firstly, the financial system safety, stability, and they're also worried because any system is only as strong as its weakest link. So they have to be sure of everything going. Then it's customer protection, because financial contracts run on trust, banking runs on trust, finance runs on trust. So customer protection is very important. And underlying everything is building a sound payment system, safe, efficient, inclusive, and innovative financial system. Now, FinTechs contend, I've told you what regulators are looking at. Now, FinTechs say that regulators are force-fitting existing straight-jacketed regulatory frameworks to their new business models by focusing on the underlying economic function only, rather than viewing FinTechs holistically or as entirely separate entities. And they go so far as to say that, the regulators are all old grey-haired fogies. Regulators say, very good, but these are just like Aladdin's new lamps for old. And we didn't grow grey in the sun, really. What you do, the fin of FinTechs, is finance. That makes you the movers and shakers, admittedly, but it also brings you squarely in our regulatory ambit. We are leveling the playing field by harmonization of regulations, and these are as applicable to you FinTechs as to other entities engaged in purveying finance, MFIs, NBFCs, banks of whatever stripe. The beast is always the same. Uniformity of regulations does make it a blunt instrument. Okay, you can say it's a straitjacket. But in that lies its strength. It is applicable across the board. Ergo, it is not crafted to penalize or punish any one entity like FinTechs. It's the same for everyone. In the financial system, everyone who is in the financial system ecosystem will have to abide by the norms. So the regulator sees all as equals. And the RBI September 2022 guidelines, which set out the regulatory framework for FinTechs, make this abundantly clear. FinTechs have a huge opportunity. They started with India Stack, Aadhaar, mobile, internet, onto e-commerce. Financial innovation through technology has definitely created new paradigms which are welcome, new business models, processes, and products that will have a strong effect on financial services, financial institutions, and financial markets. So you see, any innovation is viewed with suspicion initially Even when the spinning jenny came, or the wheel came, or the industrial revolution happened, or computers came which replaced the big ledgers we used to write in. So, yes, Big Brother is wary and is watching you. Guess why? It's to protect you and your target clientele, the customer. Customer protection with systemic and financial stability is the dharma of the RBI. As on date, what are FinTechs? The convergence of multiple technologies, mobile devices, wireless networks, the Internet of Things, cloud computing, blockchains, plus artificial intelligence. Yes, FinTechs are definitely extending the frontiers of formal finance, and that is a very welcome development. Now, there are some roadblocks. You are asking me whether is there anything wrong that FinTechs are doing. I will rephrase that question, Amol. Without going into the apps that were banned, etc., I will focus again on the major concerns of the regulator. You see, you now, other than the regulator, you now also have the government. You have the Digital Personal Protection Bill of 2023, which also you have to abide by. So, data privacy is something which is a major concern. Consumer financial information protection is a core concern of RBI, government, international data protection. Everybody is worried that whatever data you use, especially financial data, if you use my PAN card, Aadhaar, anything, it has to be with my informed consent. Then internationally, you know that Prevention of Money Laundering Act, Anti-Money Laundering Act, these are real concerns, and with good reason, because money laundering can upset any economy. Then the regulator and you, we both worry about cyber attacks, okay? And FinTechs, especially the startups, are huge targets for the same. We also worry about security breaches and data breaches, just like you do. And these must be guarded against. And here I urge extreme caution to the FinTechs on these 2-3 points. Now, FinTechs operating offshore must accordingly also ensure that their data is localized. So, what should FinTechs do? Well, really, that's for the FinTechs to decide. But as FinTechs grow to meaningful scale, they definitely need to track growth. And yes, growing too fast is always a danger at a scorching place. Not too fast, not too slow, but grow at the right, controlled, calibrated pace. So you have all the controls in place. Track your performance metric. This is a way for all businesses to measure growth, productivity, profit margins. For example, you track your gross margins, that is profit as a percentage of growth. And scope and costs are other profit targets, target metrics that FinTechs need to track to determine the extent the targets which they have set for themselves, their goals and objectives are being met. As they mature, they're no longer startups, they're no longer fledgling. They are going to be now going to go to scale. Sustainability and profitability will become more and more important as we go along. To scale up, FinTechs must focus on technology, technological innovation first. Tech innovation is not just building a tech framework for onboarding customers, It's much more than that. It's also advanced data analytics. It's not just simple algo-based lending. You have to harness and leverage blockchains and artificial intelligence. So fintech innovation can really also support what the globe is worrying about, things like climate change, sustainable resource utilization, and use increasingly they will be able to increase the total factor productivity of enterprises and help in sustainable development by evaluation and reducing environmental damage. Like they can tell you, we print notes in the RBI, the RBI note mudran press. We are very conscious of the effluents which are generated. So all these things you can, through artificial intelligence, measure and help. To scale up, fintechs need to focus on market expansion, not just market penetration, but also horizontal expansion, strategic partnerships, and enhancing product offerings to meet broader customer expectations while they maintain operational efficiency, and they shouldn't lose sight of their operational efficiency. So, broadly, what should fintechs do? In the Indian context, naturally, you will spur financial inclusion. By giving a boost to retail lending, you will spur the economy. You can also increase credit accessibility and credit worthiness of the small and medium enterprises, which still remain starved of credit. You can leverage technology for assessment using digital platforms as you do for loan processing for retail. And you can also offer tailored financial products. Ultimately, your choices, your business plan will be determined by your board. These are just some suggestions because Amol asked me this important question. Another important question which he raised was, how can FIs grow with regulatory support? Well, regulatory support is always there in the creation of an enabling environment for the entire financial ecosystem. But you must understand that the regulator simply lays down the rules of the game, much like a referee in a match, and blows the whistle when those regulations are infringed. However, I will also say that one of the most important tools, weapons, I should say, that the RBI has is to lay out our regulatory expectations. And RBI has done just this through the framework on digital lending, which clearly articulates RBI's regulatory and supervisory expectations from the fintechs. Then there are the hackathons, which test innovation in a controlled business environment. Then the regulator has also created a more enabling environment for fintechs now to encourage self-regulation in the fintech sector. RBI has just released a draft framework, and you're all invited and welcome to comment on it, for recognizing the self-regulatory organizations in the fintech space, because the best monitoring is self-monitoring, or rather peer monitoring. Now let's come to the challenges. So what are the challenges, Amol, you've asked me, which the fintechs will face going forward? So I will briefly list these. First, I've already been talking a lot about data security. So I will again underline this by saying that fintechs must ensure that they have requisite necessary protocols in place to guard against data breaches and security risks, and the personal data protection bill also underlies this. Second, of course, compliance with RBI, and ensure all regulatory compliances are in place before creating new apps, new software. Just do a hygiene safety check for meeting all the compliance norms when you beef up. Thirdly, there will be another problem going forward, and that will be of staff attrition, which will be a very big challenge. So you will train chaps and they will jump ship. So now, lack of mobile and tech expertise is a major problem, because this will result in non-user friendly apps, and you will also not be able to use, say, mobile phones to their full potential. And I confess, I'm not able to do that. So you need financial literacy, especially for old fogies like me. You also require user retention and user experience. How did the user find the entire experience? How easy was it for him to transit and transact with you? Because, you know, between the wow and the ow, the difference is only of one syllable, wow. and ow. So the syllable is W. So what do you need? Very, very important for the regulator, for you, for your customer, effective grievance redress mechanisms. You, of course, need effective marketing strategies to acquire customers, bait and hook models, whatever you do. Most important will be your personalized services, which will help to retain customers, and how quickly you're able to redress a grievance, how patiently you listen, and how swift your turnaround times are. Then you will also, going forward, need to harness metadata from all sources and AI integration. Now, data safety again will become very important here, because any collection, disclosure of personal data, including just an email address, financial data, bank account details, Aadhaar, PAN, will require the owner's informed consent, and data protection lays down, the bill lays down civil and criminal penalties for data breaches. And of course, the computer emergency response team, the CERT, will play a much bigger role in days to come to ensure there is no data seepage to overseas entities, and of course, to guard against cyber attacks. So, what you must do is you have to be collaborative, build bridges of and keep working with all the stakeholders. So tech definitely extends the frontiers of finance. It offers speed, lower cost, greater efficiency in providing financial services and financial products, and it changes the financial industry, institutions, markets. Now, regulators, as I said, are always wary of financial innovation and risk taking. But evolving customer preferences are now for refinement of technological expectations. And your generation wants everything fast. So fintechs definitely have a niche. They're very important, but they have to be conscious and engage in responsible lending, new products, new services, new to credit customers. All these three pose significant risks, but these are not unmanageable risks. Your skills and ultimately your success will lie in how you negotiate and manage these risks while understanding and while retaining your business model, your credibility, and your customer. You see, in this day and age, we can never stand still. If you don't go forward, don't go backward, you remain awkward. So, what you can do is you can't stand still, as I said, you can't stagnate. You have to move forward, and failure to innovate. And I want you to listen to this carefully, because my view is that failure to innovate and change can pose as much of a risk to the safety and soundness of the financial system as does reckless innovation. So your watchword has to be feste lente, go slow, and ensure always that you meet regulatory expectations. The regulator supports you and will support responsible innovation in a variety of ways. I'm not just talking about the hackathon. So now to sum up, I'll give you 9 points for thought. Firstly, India is one of the fastest growing fintech markets in the world. We are proud of it. And this is something we are not going to throw away. So the policies around technology also support you. UPI and this whole thing which we say her payment of digital is a huge opportunity for you. You know, as I said, from the spinning jenny to the wheel, there was suspicion. So therefore, it is even more important, critical for FIs to establish their credibility and to focus on the customer and his needs, and also on rapid exponential growth while keeping all the controls in place. Now, you should have a collaborative approach and an approach of trust with government, with regulators, with investors, with partners, and naturally your customers. So you have to be proactive there. You have to build bridges all around. Now, the regulator should, I won't say should, the regulator has a balanced approach and needs an orderly glide path. So, what is the role of the regulator? It puts in place speed breakers, red lights, and uniformity of regulation so that, today many of the fintechs, and I'm quite happy about this, are as large as mid sized banks. So, therefore, we have the hackathons and we see that in a controlled environment, what can we introduce? How can we look at fraud prevention? Because these are not just your concerns or the regulators' concerns, these are customer concerns. So, sixthly, you need to, or sixthly, you need to focus on the customer as your first priority. Tech and financial literacy will be your second priority. Your third priority should be finance, because finance will automatically fall in place. But your overarching, your governance, your ethics, your board leadership all become very, very important in this. Now, growth with guarded risk taking. As they say, mind the gap. So follow the risk, follow the rails, the guardrails, and you can't go very wrong. I'm very fond of talking about Goldilocks, and Goldilocks is just right. It shouldn't be too large and it shouldn't be too small. It should be just right for you and your customer, and that's how pricing should work. So if it's excessive, you've priced yourself out of the market. If it's too low, you're trying to undercut by underpricing the other peers. But if it's just right, then it is something which will allow you to grow with volume and scale. And believe me, what you lose on the swings, you will then make up on the roundabouts. Do nothing to excess, guard the customer, calibrate the products, and introduce the best in class products and the best in class practices and processes. So, having said all this, I wish this sector, so important for India and its people, for reaching the unreached, for growth with equity, and I shall watch its progress in the days to come with great hope. I wish you all success. And once again, I thank Amol, BFSI, and my dear friend Naveen Surya for his inputs. Thank you very much for having me here. And I wish your deliberations all success. And also, going forward, you are very important. You're going to stay and just be a bit responsible and understand the trust and the faith the people of India represent. Thank you very much again.